Yeah, the biggest takeaway from our look across the ecosystem is that growth has slowed substantially. We're not seeing large leaps in adoption. We're not seeing expansion of use in many areas. And as a result, we sort of are offering some advice on how to really reignite growth. And for a lot of the players in the space, whether they're a startup in the robo world or whether they're one of the big players in digital payments, they're looking for new ways to invigorate that growth again.
Welcome to the Tearsheet Podcast. I'm Zack Miller. A new study from Escalent, a research consulting firm that's active in financial services, shows that growth is slowing across the digital financial ecosystem. It may be easy to wave this off, but for fintech firms, this can be extremely troubling. Startups that fail to consistently grow frequently pivot away from their original market or product, or fade away into the ether. Chris Barnes, Chief Product Officer and Managing Director at Escalent, joins us on the podcast to discuss his firm's findings. Specifically, we discuss growth trends and trajectories in payments, robo-advisers and micro-investing, and cryptocurrencies. Chris also shares what he thinks fintech firms competing in these fields need to do to reinvigorate growth. Chris Barnes is my guest today on the Tearsheet Podcast.
I'm Chris Barnes. I'm the Chief Product Officer and the Managing Director for Financial Services at Escalent, a research consulting firm. And we advise companies across the financial services sector on a variety of issues on marketing and brand and sales.
That's awesome. And I mean, we came across Escalent through your work with a lot of the majors, but you recently published some findings on the digital fintech ecosystem. Can we just jump right in and start talking about that? What prompted the survey? What were the questions you were asking beforehand?
Yeah, so we've been monitoring the growth of the digital financial products for a long time, and we're really starting to see an ecosystem emerge where companies are trying more and more to connect various digital offerings, sometimes to their non-digital core services, and other times across a series of digital services. And so we were looking at, is this a true ecosystem? How is it forming and how is it growing? Because we've been monitoring growth individually of each of these platforms, whether it's crypto or robo or the micro investing for a long time. And so we just wanted to bring them all together and look at that digital ecosystem.
And what were some of the big takeaways from your work at your look at the ecosystem?
Yeah, the biggest takeaway from our look across the ecosystem is that growth has slowed substantially. We're not seeing large leaps in adoption. We're not seeing expansion of use in many areas. And as a result, we sort of are offering some advice on how to really reignite growth. And for a lot of the players in the space, whether they're a startup in the robo world or whether they're one of the big players in digital payments, they're looking for new ways to invigorate that growth again.
So before we get into the advice, I'm curious if you don't mind, if we drill a little bit further into the findings. Well, first of all, was it surprising to you to find that growth had stalled to the extent that it had?
Yeah, it was. We had expected to see a continuous movement along the adoption curve, and we see some of these specific products sort of in that danger zone along an adoption curve, right? If you don't get back past 16% usage for a technology, it often stalls out and becomes something else or fails. In this case, I don't think we'd see failures across any of these categories, but we could see substantial transformation necessary to make them viable.
Interesting. And can we talk about the way you define sort of this digital ecosystem? You didn't include all of fintech. There's some specific sectors here. So you have payments, right?
Yep, which we look at in two ways. The mobile or digital payments, your smartphone payments attached to a credit card, the peer-to-peer payment methods. So we look at those slightly differently. The micro investors, the acorns of the world, your robo-advisers, which we've been tracking since their emergence. We did a lot of work on the beginning of robo-advice, and cryptocurrencies. Those are our core pillars of the digital ecosystem right now.
Interesting. I mean, the one thing that stands out to me that wasn't included, which we've written about a lot, that is growing, at least abroad, are the challenger banks, these new digital banks. I mean, at least they claim really high end, top line numbers of acquiring millions of customers a year at this point. You didn't include the digital banks. Was that by design, or what was the thinking there?
So we view that not as a product so much as a change in services offered,
Like a
i.e. no
channel?
location services.
Yeah. Okay.
So it's more a channel piece. That's
Mhm.
why we didn't include them in this. We've looked at them very carefully around issues of trust and the adoption, right? Because it is a big change if we move away from banks, and particularly in the U.S., because it endangers a large number of small and regional banks.
Mm-hmm. Interesting. And I guess before we go into the three pillars of the ecosystem, um, how do you think about the results from the survey vis-a-vis what you know that's going on in sort of like the big money center banks? Like, are there two stories being told here, or is it a similar story?
I think for the money center banks, this finding sets up well because it buys them time, right?
Mm.
They're in a position where slower growth is fine with them because they can now manage a transition, particularly in ramping up technology and also deciding what they want to do with physical locations and which sectors they want to play in, because they have the easiest time pulling all of these together. Crypto being a little bit harder for them to deal with, but the other areas pretty easy for them to pull together under one roof. So this slowing gives them an advantage.
Right. And I guess the media and consultants are a lot of times foment excitement about new technologies when in reality the usage rates don't, at least in the beginning, don't keep up to where the hype is, right?
Right. And that was never more true than with crypto, right?
Yeah.
It got more hype than you could believe. You couldn't avoid the hype. And so, to see the fact that somebody like Facebook getting in is really going to try to alter crypto from an investment tool to use as a currency at a time when crypto adoption is so low is really an interesting potential transformation.
So let's save crypto for the end. So can we jump into payments? You said you looked at it from two different ways, from mobile payments, which includes the wallets, and peer-to-peer payments. Why do you think that has stalled, even though there's so much conversation and new products being launched all the time?
Yeah, I think you see consumer habits and personal behavioral economic movements that are a key barrier in the mobile and digital payments. The swipe,
Also,
the
credit cards
pulling
work
out
really
of,
well, right?
right, they work
Yeah,
really well.
they just work really
What's
well.
the net gain?
Yeah.
Right? We keep asking people, what's the differentiation? What's the upside to someone, right? So they have to make a change as a consumer. You have to think about, what do I get and what do I risk? And so there's still some unknowns to particularly folks on the older end of the age curve to, okay, how could this go wrong from a payment perspective off my smartphone when I have successfully conducted hundreds or thousands of transactions with this physical credit card? Well, something could go wrong that I don't know, and I don't even want to be bothered to think about it. So I'll just go back to my habit until my habit doesn't work anymore. So without that disruption or an obvious net benefit, you slow adoption.
Are there, and is this true across all products and on all, companies, modalities, or I guess how granular is this information about growth stalling in payments?
Yeah, so there were a couple of areas where we saw that there was some potential for that things were going to keep moving at a decent rate. They were doing specific tasks. People really viewed, for example, at higher expected rates that digital payments were really good for paying for things at Walmart, at a specific retailer, right? Where it's a contained transaction and they don't have to think too much about the trust. But other than that, yeah, it was across the board that this was stalled. And surprising, stall in the younger generations, not just in the older generations. And when you see that generational effect, you've got to worry about what's next. Apple's
Interesting.
trying to solve for this, right?
Yeah.
They come out with a physical card that's not like the other cards because it's really designed to be a transition from the card to the payment ecosystem being on your phone
Yeah.
completely. But they're trying to solve for the fact that that benefit and that habit has been so hard to break.
Interesting. And it's obviously too early to tell how Apple Card is, but there is a lot of hype obviously built up around that. Um, so let's move to investing and the robos and micro investing. Like these were some of at least some of the bigger ones you mentioned were some of the first like generation one of fintech. And um, are these just companies maturing and now they've reached like sort of they're beyond the early adopters. Now they got to go mass market. Is that part of the challenge here, marketing wise?
That's part of the challenge. And right now with Robo, people are more likely to be nudged into it by the business than they are to go shopping for a new Robo account, particularly if they have, moderate sums, substantial to them, but moderate sums overall of money to invest. They're getting more nudged into it by folks who have designed a system where if you're at Schwab or Fidelity and you're a lower end user, they want to get you into an advice system, but they don't want to spend at the advisor level to have enough advisors because the margins on these lower end accounts are so slim. They
Mm-hmm.
need you to be in Robo. So they're more likely to nudge you into Robo by changing the parameters of your accounts than you are to find people going out shopping to enter Robo.
Hmm. And so those big guys, the as you said, the Schwabs, the Fidelities, and the Vanguards, once they launched their robo offerings, like those took off versus the pure play robos. But they have huge user bases. Why do you think that's stalling out? I mean, it seems they have millions of customers that can continue to market to.
It's another case of consumer habits, right?
Mm-hmm.
Some of the pure plays like Betterment, they had to go back and start offering human connection to move
Right.
along their adoption curve and increase growth, because when they had problems, people panicked a little bit about, hey, who do I get a hold of? Who do I yell at here? Because that's a standard consumer habit, right? You want someone to yell at when your flight's canceled, when your transaction doesn't go through, when someone starts to a fee you disagree with. You want to be able to yell at someone. And so the expanded user bases at Fidelity and Schwab, as I said, you're more likely to be nudged into being a robo user there than folks go shopping, because the folks who are interested in that are already in. And that's why we saw over a 2-year period completely flat growth in adoption of robo-advisors.
Wow. Well, and it's interesting that the big guys are cannibalizing the lower end of their business, but I guess having somebody on a fee-based schedule is better than having a smaller client who's never trading or anything like that. What about the micro investors? So can you first describe to the audience like what micro investing is, and then sort of how growth has stalled there? I guess the evolution of the growth.
Yeah, on the micro investing side, really these are platforms that are offered for new savers, and they work on, in many cases, behavioral economic principles that allow you to stash a small amount of money by having something like a scraper that takes all your pennies and places them in, or you can put small amounts like $50 in for investment and savings, and grow slowly over time. The challenge with those platforms is they need to have significant adoption for folks who not only start with them, but will stay with them. Otherwise, they're really playing with a large number of very small amounts. They need someone who can start their career as a 23-year-old, putting away $50, $100 a month, and grow into someone who's going to put substantial sums 10 years later and stay with that platform. And I think one of the things we're going to see more of is the link between micro investing and robo grow as people try to find a transition platform so they can follow people from their initial stage of savings or investing all the way through and offer them services that change over time. And I think that's where we'll see the ecosystem become more connected first.
That makes a lot of sense. I want to get to that in a little bit, just because I think that's one of the big takeaways from the report is sort of the a lot of these services started as monoline offerings, and what we're starting to see is them branch out into ancillary products and services to help, as you described, grow with their customers, or even attract different types of customers. And what about the last pillar, the crypto? You alluded to this earlier in the conversation. Obviously, we hit hype city at the end of 2018, right? Or was it 17 at this point? And then everybody, we felt like there was a revolution coming on with crypto, and then it turned out, I think a lot of those numbers were manipulated too, at least in terms of crypto pricing. Are people using crypto? Like, I mean, we hear announcements from investment firms that they're starting to accept it and things like that, but is anything really happening there?
Yeah, the irony of crypto is the more it's used for what it was originally designed for, the less it's a great investment, right? And all the hype, and all the push was around the idea that this was a way to make a lot of money investing. And you saw, right, speculators like crazy. Those folks, as it behaves more like a currency, will get flushed out. What that means is you have to find users who find a net benefit from using a non-dollar currency. And the benefits are pretty small right now. You'll see Facebook and its consortium trying to offer benefits, but if you step back and analyze it from a consumer's perspective, they're going to have a hard time seeing what that benefit is, especially if it feels like it's trapping you in the Facebook ecosystem, because people want to have freedom of choice even if they don't use it when it comes to money. They want to know I can quickly exchange and move and do something differently. I can go to cash. And that's a big barrier for Facebook or other of the 1,000 cryptocurrencies to overcome as they start to trade as real currencies.
Interesting. So in the remaining time that we have, Chris, can we transition into talking about, I guess, how these firms can reinvigorate growth and find their path to success as these are growing companies and not get stuck in sort of that dangerous middle area?
Yeah, first and foremost, companies really have to hammer home the actual benefit of using this digital tool. The phase where the fact that it was sexy and new attracted users is over across the board for these digital financial tools. So you have to really be pushing the reasons to believe and what the benefits are. And if you can't come up with a solid case of the benefit, you're going to continue to see slow growth and may see folks fall away with the why bother effect.
Right, but if the business can't voice the benefits, the customers probably can struggle worse, right?
Exactly.
Yeah.
And I think they want to be moving towards greater differentiation. It's why the moves by Facebook and Apple are so interesting, because they're sort of occupying the space in between each of the areas they're trying to play in. And I think that's a tough space to play in. Unless they have solid transition plans to move people quickly, they could see those efforts really stall and not take off in any way close to the expectations.
And are there examples you can point to, whether they're incumbents or just sort of next gen type offerings that are doing this right in terms of, as you said, differentiating themselves, being able to explain the benefits? Are there standouts, I guess, that you can point to? I know we have to be careful because you're a consultant here, but.
Yeah, they're really not those breakaway successes. There's some standouts in the peer-to-peer space where there's high adoption, but they don't have a place to go yet, right? The standouts on the payment side really want to get into holding people's money more, right, from an investment side, from a savings side, and they're not there yet. So they're strong within the column, right? Venmo being the real brand that people mention all the time, but they need to take another step so it's not just transaction processing. If they really want to be a long-term solution, because others can offer that speed and ease from a technology standpoint, and they just need to move across the user base, but they have a step to go to solve holding money. That's why linking as an ecosystem for any of these standouts is going to be key. They need to find the next thing to do to really become the powerhouse. I think also you've got to look at the big money center banks. This environment of slower growth is right in their sweet spot, made perfectly for them to continue to slowly expand and give them time to make decisions on where they want to go in terms of each of these areas. They have all ventured into 4 out of the 5, and they're still trying to figure out exactly how they deal with crypto, and might like the fact that the government someday may make crypto harder because they think they can play strongest in the other 4 areas.
Interesting. And I guess one last question, the remaining time that we have, and I don't mean to put you against the wall, but like, are there other technologies that we didn't discuss right now that you're seeing like sort of, coming down the pike that you're excited about, that you think might have this ability to sort of reinvigorate growth in the industry or find a new sort of path to growth?
I think the solution to this growth is coming, and I think the key piece of it is going to be the use of AI to help people with their spending and savings habits, to really give them the feedback and advice to know when to save, when to spend, and when to move from savings to investing. That's what could connect these platforms. And right now, there are efforts in those areas, but it has not come up with the real strong, hey, this will give you the path. Because people will, if you can engender trust, they will engage in that way because they are unsure of those transitions. That's some of the hardest financial decision making the average person has to undertake. And the tools that they have out there are really tough. Whether it's a financial calculator on how much you should save for your kids' college, to other types of moving from savings to investing, they're rough tools. They offer as many problems as solutions, and I think deploying AI against those has real possibilities.
Chris, thanks for joining us on the Tearsheet Podcast today.
Thank you.